back with our featured guest today, Kash Pashootan. He is bullish on a Canadian convenience store stock, and we'll get to that in one moment. But you touched on this in the first segment. The Canadian dollar, you think, could well drop further from here?
Absolutely. And I think what's interesting for viewers, Andy, is when you look at Bloomberg, the expectation for the Canadian dollar is to weaken, and it's the sort of most extreme bearish case we've seen in 30 years. It's not to say that will be right, but it's to say everybody surveyed views that the Canadian dollar is getting weaker, and to the greatest degree possible. Right now, the dollar is trading at about 137. When you look at 2016 and 2020, we got as low as 145. Oof. So if you're an investor and you own U.S. stocks, the idea or the view is that you'll actually profit from that U.S. dollar becoming stronger from where it is today when it's converted back to Canadian dollars. So something for investors to really be mindful of, because if you're hedging the currency, then there's nothing worse than buying a stock that goes up, but you lost money because of the exchange. We're in a situation right now that we think Canadians converting Canadian dollars to U.S. dollars today, buying U.S. stocks, can actually make money on the U.S. dollar being stronger in the future when they convert back. And that could be about 5-6% from where it is here today.
So that's a case for thinking about upping your U.S. stock allocation?
Absolutely. And if you have U.S. stocks, and whether you're doing it yourself or have a money manager, the question asked right now is, have we hedged that exposure? Because it's common that money managers will hedge their exposure to a foreign currency. This is an environment when you do not want to be hedged relative to the U.S. dollar, and that's the case for us in our strategies and our funds.
Yeah. I have a friend who's a movie producer here, and the exchange rate's very important to him because his revenue is largely in U.S. dollars. But he says the guys who do his currency, they have predictions, and they're pretty well wrong all the time.
Yeah, currencies. Well, the challenge with currency is you have to get both sides right? If you think currency A is going to get stronger compared to currency B, the factors have to play out for currency A and for currency B. So but the biggest factor here, Andy, is going to be what the U.S. does. If the U.S. indicates that they're going to start really cutting rates, the pressure will be off the Canadian dollar to weaken. But right now, we're in an environment where Canada said, we're cutting rates, we're cutting rates, we're cutting rates. And the U.S. has said, we're going to wait. So when you cut rates, it weakens your currency. And we've received that language from Bank of Canada, not so much yet from the U.S.
Let's get to a couple of stock ideas. Alimentation, you see promise there.
We do, yeah. So simple business, gas stations and grocery store. And their model is sell you the gas for cheap to get you there. And then when you're there, they have these beautiful stores, modern, clean, and you end up buying a whole bunch of things that you didn't think you were going to buy. And so everything from snacks to cigarettes to protein drinks, ice cream, I mean, they have it all there. And the difference is that the margins on those products, Andy, are 3 to 4 times higher than fuel. So really what they've looked at is, we'll lose a little bit on the fuel by being very aggressive with our pricing, but once we get the consumer in, we'll sell them a lot more of the higher margin product, and that's been working for them. And don't forget, they're not just a small Canadian outfit, right? They're in the U.S. now, they're in Europe, they're in Hong Kong, so they've really become a global business. And, they've been strategic in recognizing the markets that they're in. So, for example, in Europe, they're a leader in the EV charging stations with over 1,600 stations. And we know how much EV has gained traction in Europe. And then with the acquisition of Total Energy and now having 2,200 locations there, they're going to continue to expand. So the stock isn't expensive. It's not cheap. It's trading at about 18 times price to earnings, which we think is pretty good for the quality that you're getting. So not a U.S. name, Canadian name, but we like it in terms of the overall story and valuation as it stands today.
And the margins on coffee, for example, are spectacular.
It's amazing. Yeah. And that's the bet they've made. Get the consumer into the grocery store. And I don't know if you've been to a Circle K or one of their overall gas stations, but they're nice, right? Like it doesn't feel dirty and small like the traditional gas stations. So they've made it. They've really invested in that consumer experience, and it's been working.
Another idea you have for us is the Toronto Stock Exchange, TMX Group.
Yeah, a lot less exciting, pretty boring business. As we know, they make money by listing companies, and they've expanded now to getting into making money as it relates to the options market as well. But really what we like is the high percentage of reoccurring revenue. So about 55, 60% of their revenue is reoccurring. We like businesses that don't start at zero every month or every year. And that reoccurring revenue provides stability and really some downside protection. So this would be more of I would say, a defensive name that you'd have as part of an overall portfolio. It's not a great dividend payer. The dividend's just about 1%. On a valuation basis, it's not cheap. It's trading at about 24 times. So again, you wouldn't buy this as a high growth, but we always look at everything as the overall portfolio, right? We're not buying 2, 3 stocks and betting the farm on it. We're building portfolios of 20, 25 names. And we like where TMX is at this point.
What a beautiful business selling data, because you have it already.
Yeah.
There's no very low marginal cost of adding another customer.
Exactly. Yeah. And not only that, but then once you become a customer, it just kind of happens. So as a customer, you're not thinking about that bill payment that you're making every month. So that reoccurring subscription model is also meaningful and high in terms of client retention.